Last week saw the biggest rail strike for decades. This week, tram drivers are on strike in South London. Workers at British Airways are being balloted to strike, as are postal workers. Teachers could be next. This summer, millions across the UK are set to ask for higher wages. Now, these people aren't asking for much. They just don't want to get poorer. Inflation in the UK is now 9.1%. That means that if you get a pay rise of 2%, you are in fact 7.1% worse off. But here's the thing. The government wants people to get poorer. That's not a negative side effect. It's literally their plan to reduce inflation. Here's Conservative MP Simon Clarke speaking to Sky News.
So it's the right idea then for effectively rail workers to suffer a pay cut?
Well, in the current situation with inflation, which is a real issue, we do have to be very, very sensitive that if we start having pay awards which take us close to double digits, then we are going to see this problem prolonged, and that is just the economic reality of where we find ourselves at the moment. And
so is that a yes then?
Well, I'm not. As I say, I'm not the legal employer in this dispute, and so I'm not going to substitute myself for Network Rail or for the train operating companies. But we do absolutely need to have an understanding across the wider public sector that we cannot have inflation-busting pay increases, because that will, in turn, drive the problem we're trying to solve.
We all need to get poorer. What kind of serious person would agree with something so utterly ridiculous? Well, the Governor of the Bank of England, it turns out, but then again, Andrew Bailey earns £600,000 a year. Perhaps he's not too familiar with feeling the pinch. I suspect not. Then there's the Bank of International Settlements, the so-called Bank of Banks based in Switzerland. They agree with Simon Clarke and Andrew Bailey and just published a report predicting that the world's leading economies could experience stagflation, low growth and high inflation, something not seen since the 1970s. They were also clear on how that might play out. This is from Monday's Financial Times, predicting how companies would fight to prevent profit margins being squeezed and workers would defend their wages. So when inflation occurs, one of two things has to happen. Two things. Either workers' wages rise to keep up with the cost of living and profits fall, or profits stay the same or even go up and people get poorer. It's a trade-off between big business and the rest of us. Now, this isn't someone who's just glued themselves to the front door of HSBC saying this. It's the Financial Times. So we know the government and the Bank of England have already picked a side. Both agree we shouldn't have pay rises that keep up with inflation and should just get poorer. I can't imagine a more politically toxic, unpopular thing to say, can you? But because of how our media works, it's just passed over as unimportant or not really explained. People will get poorer this year, that's just how it is. No big deal. It's certainly not as important as some of the heartbreaking stories published by the BBC last week of people trying to go to London to watch a West End show but who weren't able to because of those mean strikers. Maybe some RMT members can't afford to heat their homes next winter, but that comes second to people watching Lion King or Frozen, the musical. Key to the government's argument is that workers demanding wage rises to keep up with inflation will themselves help increase inflation. But is that actually true? It's important to say we've seen runaway inflation for years. It's just that inflation was linked to assets, things like housing and the stock market. In 1997, the average house price was 4.5 times the average wage. Today, it's 10 times. But because wealthier people, whose interests are reflected by legacy media, benefited from that kind of inflation, not only was it not a problem, it was celebrated. This was inflation, but it was a source of economic strength. But it is true we're now seeing much higher inflation for the goods used to assess inflation, which bizarrely doesn't include the trivial issue of housing. And it's that figure, which is 9.1%, and that people are referring to. It's the highest it's been in 40 years. Where is that inflation coming from? Primarily the war in Ukraine, as the conflict pushes up prices for oil, gas, food, and resources. It's also partly to do with global supply chains, particularly China, not returning to how they were before the pandemic. So inflation for consumer goods is high, but that has nothing to do with wages. What this has meant, though, is enormous profits for big business. According to research from Unite the Union, profits for the UK's 350 biggest listed companies now are 73% higher than in 2019. That same report found UK-wide company profits increased almost 12% in the 6 months from October 2021 to March this year. So real wages were falling while profits were rising. Unite conclude that this profit jump is responsible for almost 60% of inflation in the last half year, as opposed to just 8.3%, which is due to labour costs. What's interesting is how little the government has said about all of this. When landlords put up rent by 15%, tenants are told, that's just the market, suck it up. But if those same tenants want a 15% pay rise in line with their increased rent, that's bad. How irresponsible. How could you? And when private rail companies increase ticket prices by inflation, well, of course, that's natural. It can't be below inflation. Don't be ridiculous. Yet when the workers employed by those same rail operators ask for pay rises in line with inflation, that's unacceptable. How could they be so greedy? It almost feels like the only thing that isn't allowed to increase is wages. Profits can go up, that's good. The value of assets can go up, that's good. It's been good for decades. It's the basis of our economy. Your bills, rent, and travel costs can go up. Maybe it's not good, but it's sadly unavoidable. But not your wages. Those can't go up by the same amount. That would be bad economics. Bad economics for who? See how it works? But then there's the fact that falling real wages, which is what the government want, is the stupidest thing you could do during a recession because it will make a recession worse. Think about it. If you're a taxi driver and people are getting a 10% real terms pay cut, ask yourself, are they more or less likely to use your services? If you're in sales, are people more or less likely to buy what you're selling? If you own or work in a bar or cafe, if people are 10% poorer because their wages aren't staying up with the cost of living and prices, are they more or less likely to buy a coffee or meal? Can your workers afford to buy the products they themselves are serving? It's not rocket science. If workers don't get pay rises to keep up with inflation, economic demand will go down. Yet it turns out that the government, and even much of the Labour Party, the so-called opposition, well, they don't appear to understand that. What the government is doing is reckless and unpopular, but the media, they won't spell it out nor mention that there's an alternative of reducing profits because they're pushing a certain agenda. There's one thing workers need in a situation like this, one thing which decides whether profits are protected or they are. One thing. It's not a political party, by the way. That one thing is trade unions. High inflation is here, and the establishment's position is crystal clear. We're all meant to get poorer. They openly say it. And that's why you should support any workers on strike, any workers, because you share the same interests as them, for wages to go up and for big business, just this once, to take the hit. It's also why you need to be in a union yourself where possible and ask for higher wages. Nobody else is going to do this for you. And if business does take the hit and you get more money keeping up with inflation, well, it would certainly make a change, wouldn't it?